Hello guys, Monday here, the last day of March, and therefore also the last Twitter recap for this month here, of course, diving into various charts and from me personally on Twitter, but also people that I follow. So again, follow these guys. If you're not already doing it, they do present great value when they post. They each have their own way of doing things, but they're really good at what they do. And also here again, you have the opportunity to go to bullions.com here, where you can actually invest into gold and silver, and actually buy fully insured gold bars and coins. So you buy the token or the crypto, and if you want, you can actually have them delivered as well, to you. So it's fully backed, and it's a great way to start your online crypto, but also gold investments if you want to do it that way instead of the ETFs. Plus, you have the opportunity to get it delivered as well. Again, check out the link here on the screen, or in the or below in the thumbnail. You can find it there. So good. Let's check out. Let's see where we are. So again, today here, updated Monday is Uranium Monday. I did the weekly update for the members to see where we stand at this moment in time here. ETFs are buying. We did see some late buying coming in with big volume. That's almost always ETFs buying, because they do that at the end of the day, and they do it with often big, with big money. So the GDX here is again the same here for the gold miners, above $46, and we have broken the channel and taking out the 2022 highs. So look at this again, we're so close. Unless this is a false breakout, which it of course can be, we are in for a 1.5 decade long breakout parallel channel, and we're also very close to taking out the 2020 highs. So as long as that holds true, you have to be extremely bullish on gold miners going forward. So the only thing that could ruin this is if we break out and then we're going to come back down, then different scenario. But again, if it is a breakout, you treat it as a breakout until you are disproven, and this is a really clean chart for the gold miners. The SIL on the weekly, a break of this macro wedge, and we most likely have one fantastic 3 years in the making for silver miners. Keep in mind, this will be volatile. So this is a setup that I'll take very, very often on individual stocks, on sectors, on the 2 hourly, the daily, the weekly, the monthly. It doesn't matter. This is as good as it gets, more or less. And again, once we clear 42 over here roughly, we're breaking out from the wedge pattern, and we're breaking out from this basically breaking into 5-year highs, almost 4-year highs, taking out the wicks here. And yeah, but remember, big breakouts, they do take some time to do so. Again, it's a big breakout, so it doesn't come easy, the breakouts. Gasoline, we are peaking here in the gasoline, and to me this reflects the exact price at the pumps. And again, gold has been doing 50% in 1 year, and gold is often, very, very often, front running inflation by roughly 18 months, give or take. And if we start to see energy break out here, again, we are breaking out on the gasoline, but not yet on the USD WTI and the crude. But that means inflation is coming. If we get a real breakout here, where prices, energy can, start to do 20-30% roughly in 2025, that is a ton of inflation that will be visible, in the prints, the CPI prints, 1 year from now or so. So again, early stuff here, but again, we are peaking above, so very interesting to follow on that part. Again, a little bit of a question here. If you got offered $75 per ounce of silver, would you sell your stack? But in return, you could never buy or invest into silver or silver-related ETFs, etc. again. So, 1/3 would take it, and 2/3 wouldn't. So again, let me know, guys, in the comments what would you do here. Again, this is just a little bit of fun, you know, questioning. I would like to hear what people are saying and thinking. Again, totally theoretical, nothing more, nothing fancy. But again, 1/3 would sell, you know, roughly, you know, 2.5x from here. So that's interesting. Here we have gold to silver ratio is hovering near the significant 92. Again, 92 is the high, you know, for the range we have, and 87 is the lows of that range. So, and again, a 2-year range. Anything above, and we could be at that place where gold takes a big pullback, and silver will do worse. Yeah, that's how it goes. And again, if we can break the 87, again, silver will do massive outperformance of gold. So again, decision time comes when we leave that range. You know, the 87 to the low side roughly, and 92 to the upside. Let's see. Again, big decision point here, and it's a 2-year sideways range. A lot of energy. So when, you know, it breaks, and if it is, you know, correct that break, either way, the move will be quite intense. Copper hit our target 5.2 right here. Boom, overperformance, head and shoulders. I do believe, again, if we start to break the neckline, which I think we did during the day, I'm not quite sure, haven't checked. Again, we could have a move all the way down to, you know, roughly, you know, 4.7 to 4.8, right around here. Big back test of the big breakout here as well. So again, the target here shown to members was 5.2, and it was hit with overperformance, which you often see. Again, you can see the blow off top here, in my opinion, the snapback, a little bear flag, and then, you know, we will get the confirmation below roughly 5 point, actually 5. Also here you have a very short term trend line going down here. So again, if we break that, then again we start to see most likely higher prices. So again, we have to watch for the price action. I will not show that one here. We have the silver volatility, and again it seems a little bit weird, but again we will take it as it is. So the silver volatility index is compressed and ready to go. The last 2 times we saw the mega spikes was in 2020 and silver squeeze 1.0. We also had a spike there, by the way. So March here, massive spike, and then we have the 2020 spike as well, where silver and gold peaked. So we actually had, you know, 3 spikes, and then again February 2021 with the silver squeeze. So, and again, if this was a stock here, you have a very tight downsloping wedge slash range, and if we were to break that, you would be buying into that. And if we see the spike, boom, again, that is when silver does, you know, the big fast gains, you know, basically going higher a lot faster than previously. So interesting here. I haven't been looking at this for like a year or 2, so that was very interesting to me. Currency in circulation divided by silver on the weekly. So this is 10 years in the making. 10 years. Keep an eye out on this head and shoulders pattern. When it breaks, silver is poised to vastly outperform the money in circulation, creating a powerful tailwind for silver. This 10-year head and shoulders formation signals the start of the long-term outperformance trend. And there are many ratio charts and compared to silver, where silver is very close to like a 10-year breakout. So again, this is one of them. And again, it just shows that we are very close to when silver breaks out against multiple other sectors and or in this case currency in circulation. So that is very, very it would be amazing to see the breakout there and silver really start to shine. Good. We will have 2 more. Silver divided by the Dixie, so the dollar index on the monthly. We will have liftoff when silver measured in the dollar index is breaking this red supply and demand zone. We have already broken the wedge in 2024, and now we are at the last major hurdle. Again, speaking of, look at the range here. Excuse me, the zone that we're about to break. Same thing like we just looked at on the circulation money, you know, money in circulation. So once we start to break here, we have a breakout of a very beautiful, insanely beautiful wedge pattern going back 1 decade roughly, even more. Breakout, retest, resumption, last hurdle before we can finally get some fresh air, is where we stand today. Very close to that big moment where silver can move. Yeah. Silver divided by platinum on the 6 hourly, so we're looking at basically 2025. We are at a critical retest point here for the silver to gold ratio. It should be platinum, but I'm just typing this way too much. If silver holds, if this level holds, silver should continue to do the outperformance. However, if a failed retest, platinum might take the lead moving forward. This chart remains bullish until proven otherwise, meaning silver for now is again a better play than platinum. But again, we are most likely going to retest here. So short term, platinum will do better than silver, it seems, because we are back testing basically the 0.034. If we bounce, good, silver will do better. If it's a false breakout, platinum will do better. It's very, very simple when it comes to that level. And I do believe if we are going to have a false breakout and platinum outperform, that's also when platinum has already broken 1050 and is just hammering to the upside. Good. I have nothing further. The time is spent, guys. Have a great day. And yeah, again, thumbs up, all that good stuff, guys. Have an amazing day. See you tomorrow. A new quarter begins. Again, we had a quarterly close. And before you go, I posted 2 days ago, silver and gold had one of its best first quarterly gains in over 100 years. I think gold was in the top 3, like third, and silver was like number 6. Amazing. Really good start to the year. Have a great day, guys. Cheers and bye.